we've got to I'm sorry about this, but we do have to talk about the budget in the UK. We've been waiting for months for this, haven't we? Now, what Labour promised before the election was a budget for business. Is this going to be a budget for business?
Well, hard to see it will be, given what we're expecting to hear is the biggest measure so far will be, frankly, a tax on jobs. An increase in national insurance contributions for the employer, not the employee. You won't see it on your payslip. They're quite obsessed about these payslips.
We have got cumulonimbus clouds in terms of taxation, capital gains tax, inheritance tax. What worries me more than the inheritance tax, though there's been a lot of comment that this could actually cost an awful lot of money, is CGT. Why? Because it won't take much to discourage people to change their mind as regards inward investment coming here if it's too... Do you think there's going to be a flat tax on a lot of these things? There's a lot of things thought it might be rounded up to around 38%, getting capital gains up from 28, moving other things.
Well, it looks pretty clear capital gains is going up, and specifically on share sales. It looks pretty clear that inheritance tax rules will be removal of reliefs, and that will hit AIM shares. And actually, AIM stocks have already really come under an awful lot of pressure. I'm worried about that because there's ramifications on from that. It's not just the investors in AIM, it's people who invest in trusts that invest in AIM, if you know what I mean.
No, exactly.
It's there's a whole infrastructure there, isn't there, of sort of small cap British stocks that you'd have thought actually you'd want to buttress up. I mean, one of the things that's so astonishing about any pain or targeting of business is that SMEs account for 60% of all jobs. I mean, it's just astonishing.
5.6 million people involved in them, apparently.
Exactly. There you go. And I think, so I should have mentioned, and this I will be watching this very closely, as will everybody on Wednesday, is that the rise in national insurance contributions will be reimbursed for public sector entities like the NHS. Now, while I can see they will make an argument for that, which is, it's on its knees, we've got to give it more money, we can't give it more money and take it away again, because the NHS is also a massive employer.
1.5 million people,
It's hard for that not to give the message we're putting the public sector workers first. And then that chimes with your pay rises, and then that is, how do you get away from that looking anti-business, even if that's not what you mean?
Mr. Haynes, who's the Chief Executive of Aquis Exchange, which is a parallel operation to AIM, is very worried about capital gains tax and what it might do to SMEs and small companies. He said, and I thought it was rather a good idea, that it should be progressive. Now, what do I mean by that? Is you make a lot of money for whatever is selling your business, it doesn't matter. You keep your shareholding for a long time, say 10 years, you pay no tax. You sell it immediately, you pay a very high rate of tax, and it gets lower and lower and lower as you go on. I thought that was a terrific idea, but I've never heard anybody else mention it.
I think what we touch on here is the incentives, isn't it? This is the key about it. And all I keep thinking with governments all throughout the years is they tinker and they complicate, and then the incentives get moved and people game the rules, and I would just love to see it be simpler. If it's simpler, everyone knows where you stand.
Let's talk about the poor investors or rich investors in the middle of all this. You've already talked about the dangers of capital gains tax increases and so on as far as SMEs. All right, noted. If you were an investor and knowing what you do know and what you suspect may happen in the budget, which way would you turn? What kind of things would you be looking at? Infrastructure?
Oh, absolutely, yes. I mean, one thing the government is absolutely focused on is planning and planning reforms, so housing as well. I mean, maybe housing stocks I want to look at. Again, we know it's tricky. We've just said it's hard to see the change. You know, change will take some time, but it is a priority for them. The one thing guiding Rachel Reeves in her May's lecture she gave in March of this year, she said the key to the economy is house building. So house building, infrastructure, I think green, you touched on Ed Miliband's interests, a tinge of green.
He needs to be pulled back on the bridle, I think, though.
Well, yeah.
He must not be allowed to run green. I really don't think it's not the pun.
Yeah, what keeps coming up when they bring forward their green policies is it's just not credible. It won't work on the numbers that they're talking about. So I think that is the way that they lean, and therefore will, prioritise accordingly. So if you're thinking about where to put your money, I think you should probably be prepared to stay in your investments for longer.
Jiggery pokery as far as the official figures are concerned.
Yeah,
If I can put it, Gordon Brown did it all the time. I don't get why the international markets don't see that and don't screw the gilt market, basically, if I can put it like that. I see what the level of debt compared with GDP is as a percentage in this country. Yeah, it's huge.
Big, massive.
And also the public sector borrowing requirements as well, etc. Why don't the international markets kick the pound to pieces?
Well, I actually think you hit on what I considered the risk, is the pound. I think the gilt market could, the gilt market is going to get caught up in a couple of crossings here. One is borrowing, as you've said, there's this amount that she might not use all of it. But if it's considered there might be a recession or there might need to be more Bank of England rate cuts as a result, then actually yields could come down and gilts could look like they're going up. So there's sort of a conflict there. So where you might see it more clearly expressed is what you've hit on, which is the currency.
Treading carefully is what this is about, given the Liz Truss experience, isn't it? I mean, they have to be very, very careful about what the gilt markets think, and we still don't know because, of course, we haven't got the detail yet. So far, the gilt market appears to be holding its breath. Do you agree with that? Maybe more or less.
Well, not really. If I may say, this was sort of rumoured about 6 weeks ago, and if you look at the yields, I mean, I've got to being the anorak that I am, I've looked up, the yields have gone up, say for 2 years, from the 18th of September, has gone up from 380 to 4.10, 7-year from 3.63 to 4.12, and 10-year 375.2 to 4.2. As a percentage increase, that is significant and very costly in terms of servicing debt. Now, what I'd like to ask Helen on coming in with what you've said is that if this new facility, which I call creative accountancy, where I've had my wrist slapped, is implemented at the £50 billion level, I don't think the gilt market will like it. If she starts off by saying, well, we're only going to use 20 billion to start with, will the gilt market buy it?
Well, that's the big question, and that will depend then on the credibility of the entire package and the credibility, I might add, of the government. Because here's the thing. So there's a facility for 50. She says I'm only using 20. What then happens if life doesn't pan out, growth isn't there, it means you need a bit more money to get there, you need to spend a bit more, the temptation's there. Does the market believe that she will be in post to be in charge of those decisions? Does the market believe that her party won't, put pressure on her to use some of that if the growth is not forthcoming? Because this is again the thing. If you're setting, we want growth in 5 years' time. Well, I mean, can we wait?